Welcome back, and joining us on the show now is Peter McGuire. He's CEO, Exim Australia. Peter, hi, good to have you. I want to start with the crude oil prices, where we have seen a 4% decline overnight. We are trading below the important resistance levels and at around 6-month lows right now. All the statements, all the events are pointing towards slight surplus and further pressure in crude. How are you looking at these markets right now?
Well, good afternoon, Manisha. I think they've been crushed, and certainly, this will be probably the 8th week of consecutive downdraft. So don't get in the way of a falling knife, as they say. You can't help but being short because, quite simply, until you see a significant bounce to the upside, I think everything is just, fairly short. And I take on board the positions as far as viewpoints, but the storyline is very much, bearish at the moment.
Yeah, Peter, as you're talking, we have this news flash coming in on CNBC-TV18 that COP28 has approved deal on transition away from fossil fuels. I mean, this is the first time that this has been included, and there is an approved deal now on hand on transition away from the fossil fuels. So how would you read this? We, of course, are still awaiting those details coming in from what really has the draft, what is the timeline that they have seen put in sense of transitioning away from fossil fuels. But this itself, would you believe, will have a weaker sentiment impact on crude prices?
Well, it could. Yes, I would think so, Manisha. I think a couple of things. I've been waiting for that number to drop and that announcement to drop, I should say. And, everyone's been sitting on the edge of their seat seeing if it was going to get, the green light. And obviously it has. So the impact is going to be, I think, probably further downdraft for crude, certainly in the short term. It's going to be an interesting year, Manisha, quite simply also because you've got a US election next year, and should the Trump administration be successful, then how's all that going to work as far as his consideration as far as drill, baby, drill?
We do know that as this draft was being prepared, Peter, it was Saudi Arabia which was trying to taper off in sense of the language there. We do understand that this is not going to happen in the next year or next 5 years also, for that matter, but I'm sure there's a timeline to this. How would you look at the oversupply, or rather higher production, that we've seen from US, Brazil, Canada, and the OPEC and allies also, that 2.2 million clearly hasn't done anything?
No, it certainly hasn't, and I think that's very interesting how that hasn't had an impact. And so the storyline, Manisha, may be that you're going to see further cuts, and that, to try and, I think, stabilise the market, and that could be the strategy maybe in the new year. So again, wait and see where it rolls as far as leading up until December 31. I think it's, everyone's sitting here scratching their heads saying, where does it bounce and what level does it bounce? But at the moment, it seems to be, as I mentioned, that push to the downside. And then, the longer term situation leading into 24. And as you mentioned, yes, I think, it's a number of years until you get real traction on the COP decision. But it's, as far as it's concerned, it's a green light, and it's all stations go by the looks of it.
Oh, well.
Okay, all right. Peter, happy to have you here on CNBC-TV18. Thanks a lot for joining in. And Manisha, thanks for taking us through the outlook on crude as well. For now, of course, it's a big positive, the fall that we've seen in crude prices and the benefit for our own markets. Well, we leave you with the market absolutely flat, in the sense it is exactly where it was about an hour ago. There's been no movement at all. The headline index is down about 100-odd points, but nothing alarming, just some cooling off after the kind of run-up that we've seen. With that, it's a wrap on Halftime Report. Business Lunch will take all the action ahead. Stay tuned.